Welcome to Cryptonomics, your premier destination where finance meets the future. I'm Delta, an economist and a seasoned crypto and stock investor. Today, I'm going to teach you how to use an investment strategy or trading strategy called arbitrage, where you can make 4.5%, maybe 5% on a single trade with minimal risk. Arbitrage is a strategy where you can purchase an investment in one place and sell it for more in the other. Usually this is done simultaneously, where you buy in one place and sell it in the other place instantly, capitalizing on the price difference. In this case, I'm going to show you how to make between 4 to 7% arbitrage on Ethereum by trading it now, but it is not instant. You have to wait 2 months to realize this arbitrage gain. This is why I'm calling this Marshmallow Arbitrage. Marshmallow Test is a famous psychology test that I will dive into later. Currently, if you're staking your Ethereum, helping validate Ethereum blocks, you are making about 4% on your Ethereum rewards. Using this arbitrage strategy, you can make that same 4% or more in just 2 months. It is not risk-free. Nothing in investing is, especially in crypto. You are taking on smart contract risk and bridge risks. But if 4.5% or 5% is enough of a reward for you to take on that risk, then follow along and see how you can arbitrage some Ethereum. Now, this is an arbitrage plus marshmallow. If you are familiar with the Marshmallow Test, psychologists did an experiment where they would put a child in a room and present them with one marshmallow, and they would say, you can eat this marshmallow now, but if you wait 10 minutes, I'll come back and I'll give you 2 marshmallows. It is delayed gratification, and if the child was willing to wait, delayed gratification, they would get more. They later followed these children through their life and their careers, and the kids that were able to pass the marshmallow test, aka were disciplined enough to forego current benefit at present for future rewards, future profit, which every good investor does, they were more successful in their studies and in their careers.
Marshmallows? You do? Well, here's a marshmallow for you. You can eat it now, but if you wait until I come back, you can have 2 of them. So you can eat this now, but I'm going to go outside for a minute. When I come back, you can have 2 marshmallows if you wait.
Okay, I'll wait.
Do you think you could wait?
More than 550 children were given the marshmallow test between 1968 and 1974. After this, Walter Mischel divided the 2 groups on pen and paper, not tell the children anything. 14 years later, he went back to those children, and he found amazing differences between the 2 groups. Those children, who were able to control themselves, on average did better in academics, in co-curricular activities, they are more successful, they have higher income, lower drug addiction rate, higher SAT scores, and were better at maintaining close relationships.
You know that if you sacrifice now and you study, then you will probably get a better grade on your exam later. The reason I am calling this the marshmallow arbitrage is because it is not instant. It is instant when you trade your Ethereum. You will get instantly more Stone ETH. But that Stone ETH is not instantly convertible back for Ethereum until March 26. So if you can wait 2 months, then you will get the benefit of this arbitrage trade. If you followed along with me in the previous video, you might be familiar with Aperture, Finance, and QuickSwap. These are decentralized exchanges on the Manta network. Here we can see the price of Ethereum relative to Stone ETH. 1 ETH right now gets us 0.04 Stone ETH, which is a 4% arbitrage. Now, I am sad that it is not higher at the moment. When I first discovered this, it was 7. I traded very few Ethereum at that price, between 6 and 7%. By the time I unstaked my Ethereum from my solo validators and transferred it over the arbitrage was 5%. I was able to capture 5 and 4.5%. Today, it's actually fluctuated between 5.5 and 4%. So the arbitrage is being eaten away by people like me. And if you look at on-chain analytics, which you can look at on Etherscan, you can see that people are trading Ethereum for Stone ETH. There's really no reason to do that unless you can capture some value. The price updates, and hopefully by the time you watch this video, it is still at least 4%, if not better. We are on Aperture on Manta Pacific network, and we're going to trade 10 Ethereum for 10.5 ETH, 5.2. The exchange rate is about 5% difference. We have already done this with a bunch of ETH, and now we're going to deal with some more. Yesterday, the exchange rate was almost 6%. So it's fluctuated today between 5 and 5.3. We're just going to do basic dollar cost averaging, and we will trade 10 now and then wait and see if over the next couple of days it becomes better. Let's see if we just do one. 5.3. It's actually gotten better. So maybe let's wait a little bit. We'll wait a little bit and then we'll make some exchanges trying to get free 5% arbitrage, hopefully 6%. And by the end of March, we'll be able to swap one Stone ETH for more than one Ethereum. So we should get better than 5 or 6%. The way you take advantage of this arbitrage is, first you have to have Ethereum. You have to have ETH. If you're already holding ETH, maybe it's staked, you're currently earning about 4% annually. Well, here you can make 4% in 2 months. So you can make your 4% in 2 months and then go stake it for the rest of the year to get your 4%. So this is a way to juice your Ethereum yield by 4% for the year by locking it up on the Manta network for 2 months. The way you would do this is bridge your Ethereum to Manta Pacific, connect your wallet, and then bridge it over. Now, the fees were astronomical when I did this. I was hesitant to bridge over because the fees went from $30 to $90. And in retrospect, I should have just paid because the loss of arbitrage was much greater than the $10 or $30 I was overpaying in gas fees. I will simulate bridging over 1 ETH. I will not do that just to check how much the bridging costs are now. I suspect that there were some shenanigans. See, right now it's $55. I don't know if you can see that. There we go. It is $55 to bridge 1 ETH. This is unreasonable. Most other chains charge $8 to $20 max. This was $90 when I bridged over a couple of days ago. It's insane. There are some shenanigans here that I don't like, but this is the cost of paying $50 to earn. You do the math of how much 4% is worth to you. Okay, so once you bridge over your Ethereum to Manta, then you can come to one of these many decentralized exchanges like QuickSwap or Aperture Finance and trade your Ethereum for Stone ETH. Here you can see that I have another 14 ETH that I can trade at 0.9612 ETH. Let me move this. Okay, so here you can see that 1 ETH gets you 1.04 Stone ETH, which is 4%. Similar on Aperture Finance. 1 ETH will get us, same thing, a 4% arbitrage. Is 4% worth it for you? Well, if you are currently staking Ethereum, that's what you're going to earn in a year's time. This is a way to speed up your earnings for 2 months. I did this for a portion of all my Ethereum, obviously not all of it, because the arbitrage profit is attractive enough for me to risk a large sum of money, but not all my money. A contract can fail. Something can go wrong with Manta as it is a new thing. So you decide whether 4% or whatever it is at the time when you look at this is worth the risk. Smart contract risk is the main risk you're taking. To layer bank is because supplying every dollar worth of assets deposited gets me 0.3 points every 6 hours. I'm getting points for all that I've deposited. Right now, I've earned 862 points. I'm ranked 2,000 or so. I have another account that I did this with also, the original one where I staked through New Paradigm. So I hope that the Layer Bank's airdrop is worth something also in the future. So when calculating that on top of the arbitrage opportunity here, perhaps it is more than 4%. We don't know at the time. Stone ETH is also earning as that Ethereum is staked on Lido, and Lido is currently paying about 4%. The Stone ETH, it should trade for more. It's not just the Ethereum to Stone arbitrage now. Later, when you trade Stone for Ethereum, you should get more than 1-to-1, as Stone should be worth more as it's accruing interest from Lido as well. This is similar to Rocket Pool Ethereum. Okay, so as you can see here, Rocket Pool Ethereum is worth 2,500, but Ethereum is worth 2,300. That's because rewards have accrued and now our ETH is worth more. Same thing will happen with Stone ETH. At the end of March, when you can withdraw your Stone ETH into Ethereum, you should be able to get better than 1-for-1. It should be a little bit more than 0.5%. So like 0.006%. So on top of the 4, you'll get another half. So like 4.5% is the arbitrage you should get on Stone ETH. This is how an arbitrage gets erased. When I first had this idea, the arbitrage opportunity was 7%. It is now 3.994%. So as time goes on, people like me erase the arbitrage, driving it to 0. You snooze, you lose. So there you have it. That was a lesson in arbitrage and how you can make about 4 to 7% on your Ethereum by trading it for Stone ETH on Manta Pacific. And by waiting until March 26, where you can withdraw your Stone into Ethereum, at which point the exchange rate should be better than 1-to-1, where you can get more Ethereum per Stone ETH. It's a way to juice your yields and take advantage of this mispricing on the exchanges. The reason this exists is because people bridged over a lot of Ethereum to New Paradigm to farm the airdrop. These people now have a better use for that Ethereum somewhere else, and they want to get it out of the Manta network and put it somewhere else, possibly farming another airdrop that could be worth more than the 4% currently. So to them, exiting the Manta network and paying a 4 to 7% penalty, because they probably made more than that in the airdrop. I think I made 10% in that airdrop. So anything up to 10% is probably still profitable for them, net positive, especially if there's opportunity cost of not doing that at the moment. Their new opportunity and tax they have to pay to exit is your opportunity for free arbitrage if you can pass the Marshmallow Test and wait until March 26. Here at Cryptonomics, I break down jargon like arbitrage, analyze trends, and share insights on arbitrage opportunities like Stone ETH so you can make wise financial decisions. I hope you found this episode informative and profitable. Until next time, may the force of compound interest be with you. Peace.
I want to be a marshmallow.
What would you do if you were a marshmallow?
I would just wobble around.
You would what?
I would just wobble around
Wobble around?
joy.
With joy.